Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, March 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had May corn down a penny at 452 1/4. May soybeans were up 4 1/4 at 1027 1/4, and May Chicago wheat was down a half at 527 3/4. No export sales announcements here this morning, so we'll jump right in. Obviously, guys, report day. We've been talking about it for a couple weeks now, and it's finally here. We'll get our first look at intended acres and certainly quarterly stocks, which will be good. So we get a little bit of a roadmap here as we go into planting season, which has been going on. I know central part of Illinois. A lot of planners were rolling there. I guess with that, Dustin, maybe a few thoughts to kick off the morning, and then we'll throw around the room.
Yeah, Dan, I think, it's always important to remember that nobody really knows where these numbers are going to come in. The methodology of this survey is, why everyone pays so much attention to it. It is going to be a surprise to a number of people just based on those analyst estimates. There's some in the mid 92.5 range for corn acres, and there's some, above 96. The average guess just above 94 million for corn, and then what that means correspondingly for beans. I wouldn't be too surprised to see that number, but obviously some really wide, conviction between those two, between that poll of analyst estimates, and how does that come out if we go and print a 93 corn acreage number, for example. That could be a very friendly corn number. If they go print a 95 corn number, that could be a fairly bearish one. So I do expect some volatility from this today. Wouldn't be surprised at least to see that. On the quarterly stocks number, one thing just to keep in mind, we did see a lot of disappearance in that Dec 1 to March 1 timeframe. We had really good export inspections. We had ethanol production up 4.5% from the prior year during that same timeframe, which that's easily 50 million bushels. So to see, kind of predisposed to maybe some of that tightness in corn, explain why July D's corn has been so inverted and why the spreads have stayed fairly tight. I would not be surprised. But then again, these are reports that you can see a 200, 300 million bushel swing from stocks from what you would have guessed just based on disappearance estimates alone. And, we chalk that up to just noise in the survey, what was in transit at the time. So I don't want to go in with, giving anyone a false sense of security that we know what's going to come out from this report. You just don't. That's why these are so important.
Yeah, very good. Jace, welcome back. It's always fun on these report days, certainly these big report days, to say, and what's the first number that you'll be looking at here today, and what's your, I guess, overriding opinion just on today's events?
Yeah, thanks, Dan. Yeah, with the out skiing in Colorado, so we had some good weather. Seemed like I didn't miss a whole lot, kind of boring markets and markets going down. So now I'm looking forward to this report. I think Dustin put it well, right? A wide range of guesses here. Definitely market feels like it's nervous that we're going to pick up a lot of corn acres. I'm, kind of looking at that corn bean ratio. It would suggest more corn acres, right? But obviously debatable in this tight margin environment. The cost to grow more corn obviously has to be on people's minds. So this is a big report. I've heard this compared to 2016. Right. So if you look at that year, right, we did pick up a bunch of corn acres that year. We were sharply lower on the March 31st report. We were breaking, really all, January, February, March of 2016, and we got that number. We dipped lower, and then we completely erased it within 2 weeks, and we started trading weather. And we traded more of a seasonal kind of time frame, April, May, June weather. And then ultimately we did have a lot of corn acres and a good yield that year, right? And that was a bearish year as well. So I wouldn't be surprised to see something similar if we got a bearish acres number on this report, that we've already beaten up the corn price. If we beat up some more on some big acres numbers, where's the incentive? If we go push corn another 20 cents lower and we're down in the 420 region, I just don't see a lot of incentive for growers to go out and need to hedge that with all these safety nets that we've talked about through crop insurance and farm bill and stuff like that. So I guess I would be, I'm keeping my powder dry. I think growers should be as well, right? If you have some hedges on, you have crop insurance, you really need to look at all that. And, it might honestly be a buying opportunity for even a grower who has some of those things on, right? To get some upside for a summer market. As a trader, that's what I'm going to be doing. I'm going to be looking for opportunities probably to buy on a bearish report and maybe sell on a really friendly report. I'm obviously kind of hoping for a friendly report. That'd be more fun. But anytime you have a really strong opinion going into these reports, it's tough because you can get yourself backwards if you're quote unquote wrong. Let's say you see a really bearish report to that point, right? And we put corn down 20, and then you panic. Right? I mean, probably the worst thing you do is kind of panic and say, I got to sell corn now. Look at all these acres we got, So I guess that's where my head's at, is keep your powder dry, keep your emotions out of it, and, see what this report says. So
a couple very good stuff. A couple things that was interesting looking this morning, just like on kind of the worst misses that have happened in the report. And you go back and for corn, interesting enough, it was in 2020, 6.6 million acres was the worst miss between this report and final numbers. And
what year was that?
2020.
Oh yeah.
Yeah, and then for beans it was 19, which was 8.5 million. So you just kind of highlights that today, while it sets up a little bit of a roadmap, we still got a heck of a long way to go.
Well, yeah, let's talk about that actually, because that almost plays into Jason's point almost exactly, which is, what happened in 2020 is that we had COVID, markets broke substantially. We were just kind of in the beginning stages of discovering what COVID means, by the time that this report came out. And a lot of that survey was done early March, right? And so it's like almost right before the real, I guess it was during the early stages of the thick of it. But the disincentive, we went down to the lower threes for corn. And so we had high prevent plant acreage that year. There was a huge lack of price incentive. So that makes sense if to Jason's point, part of the problem with panic selling is that like the market's already doing its job right there, trying to convince some growers are kind of on the edge of planting beans on corn versus corn on corn. Maybe that pushes them back to beans on corn, or maybe, weather's just not great enough that they're not going to mud it in the plains because the price incentive's not there. So a lot of times low prices are the best cure for low prices. And that's why we don't want to panic and sell into them when we already have safety nets in place. 2019, it was the exact opposite for the incentives. The incentive was corn was trading sub $4 for the previous 12 months for a lot of that time frame. Funds were record short, and they had to blow out as we just could not plant corn. So naturally, you'd think you would get more bean acres. It would actually match the March 31st bean acreage number because late planting should go to beans. But no, it went to corn because of the price incentive. And everyone thought, well, no one else is going to plant corn. I'm going to go plant corn, in late June and even into July, and I'm going to get rich off of it. Everyone had that idea, though, and we ended up not really losing much corn acreage. We lost the bean acres that year.
Yeah, right. Yeah. This report's not the end all be all, right? By any factor. We still got to get it planted and see what the weather brings, and then to your point, the price is going to be a big factor. If we get a surprise on this report, right? We can go buy. It almost feels like the corn market. How I feel about it is it never cares about not having enough corn acres until it does, right? And it can easily go buy back corn acres, right? The market's like, we can go get corn acres. That's easy. Well, it's always worried about too much corn acres, so that's what it kind of feels like to me. It's like we're worried about too much corn acres. We're trying to disincentivize it. It'd be nice to get a little bit of a friendly report, and then we can go stabilize these prices and go make sure we get enough corn acres. But the market can go get corn acres easily with price incentive.
Yeah, stocks.
Right.
If stocks are probably one of the better hopes too. I mean, if we come in low on stocks, like that's just something that we have to make up otherwise.
Yeah, and if you go ahead, Jason.
Well, and that seemed to be kind of the narrative for the whole price move post harvest, right? I mean, we saw these really strong markets in corn, obviously until recently, until this kind of big break in funds dumped, and a lot of that narrative was, we're using too much corn, we're selling too much corn, stocks are going to be a lot tighter than we think, and that's kind of been put on the back burner somewhat just because of price action, right? So that would be an interesting curveball to this report would be a bullish stocks number.
Yeah, and just for reference, the average guess is a little over 8.1 billion for corn and then 1.9 for beans. So just for those keeping track at home, if you look at those as kind of your benchmark, it's going to happen quick. It always does with these flashes on today's report. So as always, if you'd like to call and visit, we got some time here. You're going to have 2.5 hours or so before 11 o'clock to get in touch with us, go through everything, make sure that you're where you want to be as we head into the number. So that'll be good. We're also going to be on at 11:20 with our reactions. So bonus war room edition today, 2 for the price of 1. So we'll be back at 11:20. Ryland, real quick before we come into the open here. Friday's kill higher than expected in cattle, which was I guess good to see. And then feels like in hogs, everybody's looking out towards middle of the week, April 2nd, for tariff news and see what shakes out there.
Yeah, absolutely. I mean, it was a good close, on Thursday, and then Friday, it just seemed like you had a lot of enthusiasm, just kind of hit a wall here. So, I mean, cash trade was a little bit mixed, kind of all over the map, really. You saw a lot of 209, 210 in the south, so that would be about down 1. Then on the other hand, the dress market in the north just went absolutely nuts. So you saw 335 to 345. I mean, that's steady to $10 higher in some places. So we got a big kill. I think the expectation is that that's going to put a little bit of pressure on the beef market this week, but we'll see here. I mean, choice was down 290, select was down 76. I mean, we're coming off some really big prices, so I think there just is that concern in the back of everybody's head, like this thing could just fall apart any second. But honestly, things are holding up well. Obviously, the futures haven't just absolutely crashed right here. So, I mean, I think there still is some cautious optimism, but overall, everybody's staring at the managed money position. It's a very hefty position in the live cattle, 137,000 contracts, and the feeders record large at almost 35,000. So, I mean, if there's some bad news or there's an upset or a big disappointment in cash or beef prices just can't get get some support here, I think overall, there's going to be some panic here, but otherwise it just seems like we're kind of trading week to week. On the hog side of things, we got the pretty friendly response to the report, and then, everybody's hopes came crashing right back down, settling just kind of, with light losses, just right back to where we've been. So it does seem like the tariff situation is really going to be the focal point this week and maybe determining kind of the longer term direction. So the devil will be in the details, if it's reciprocal retaliatory tariffs, if a deal gets struck, if there's some kind of new trade announcement. I mean, it seems like it's a constant evolution of a lot of different perspective and headlines. So I get why we're just kind of sitting here and in kind of a tight range right now. Otherwise, we are seeing carcass and cash kind of hold up. So we'll see what the details are with everything. But right now, the hogs seem to be in a holding pattern for right now.
Very good. Ryland, on the feeder side, certainly looking at corn action here today, right? I mean,
absolutely. Yeah,
I should see a response. Definitely
going to be a big piece to the puzzle. And hard to say which direction, it's going to go. But yeah, I mean, that's definitely going to probably affect just some interim trade. Maybe there's a longer term perspective right now, but I mean, from where where the crush is, it's still kind of a decent situation as far as corn prices go. So I think anybody that's finishing out cattle right now is going to be looking for a break here, so we'll see.
Very good. Appreciate the update there. We'll get a quick readout here before we run. We got May corn down a penny here, 452.5 is the last. May soybeans are up 5 1/4 at 1028 3/4 is the last there. And May Chicago wheat is up about a penny at 529. Again, the USDA report will be out at 11 o'clock Central. We will be back with a bonus War Room edition with all of our thoughts and comments on the report at 11:20 Central. That's 11:20 Central. We'll be back. So with that, also, we've got a couple days left with our special offer that we've been promoting here for the last month or so. Jack's got more info in the outro, but give us a call. Love to visit with you. Certainly got a little bit of time here before the report. So if you got a little bit of anxiety here pre-report, give us a call. We can talk through it. Thanks to everybody that supports the show on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We'll be back at 11:20. And until then, thanks for everything.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.